Hey all, Tom Weller here from forexreviews.info. In this video I'm going to go over a series I'm going to start. It's called Creating the Price Action Mindset, how to create the price action mindset. And what I'm going to do in this series, I'm actually going to go over regular previous trades and just show you how I assess the market and what I'm looking for, just so that you can create that, that understanding of what another trader is looking at, and just to get an insight into how I'm looking at price action. So about a week ago I did a Forex outlook for a number of different pairs. So that's what I'm going to go over, because last week I did about a bit over 50 trades. So I had a very active week in the Forex market. And during that week, I managed to pick up just over 600 pips from the Forex market. So I had an exceptional week last week, and which was great. And I just wanted to show you the mindset of what I'm looking at, how I pick my trades, and just looking at the pairs that I actually pointed out and areas I said for you guys to actually look at for different sorts of price action. So first of all, let's just jump on the Euro US. Now, if you like this series and you want me to keep pumping out regular videos like this, then just keep hitting the like button below, and I'll do my best to try and get out as many more as the weeks unfold. And if it goes really well, I will actually just keep producing videos in this quite regularly, just so that people can get an idea of what to look at in price action. So I'll let you guys judge whether this is the sort of series you guys want to see. So just hit the like button if you like it. Okay, so first of all, last week I went over a number of different pairs. I went over the Euro US, I went over the GBP New Zealand, I went over the GBP US, I went over the Australia US, I went over the New Zealand US, I went over the US Swiss, the Euro AED, AED JPY, and GBP JPY. And I told you guys rough areas to look at for possible reversals, or look for some decent price action. So let's go over those pairs now, and I'll just show you my assessment. So, and what I was actually looking at last week. Okay, so first of all, we've got the Euro US here. Now I told you guys that around in between 132.70 area and 133 area, we're going to probably get some bearish price action in this down move, because it's, hold a second, I'll just show you with the Fibonacci. It's the 61.8 at 133.20 area. Now I expected it to turn around the 50%, which is 132.70, but it did push higher to the 61.8, which happens, and price is sort of hanging around that area. We still haven't broken lower yet, so this could be a bit of a tight little range sort of area where it could just pop up and down. So anyway, I'll just show you what I was looking at then. So I was looking around 133 area for bearish price action. So I jumped back to the 15-minute chart, and all the trades I took last week were all on the 15-minute charts, guys. So this is going to give you an insight into trading that time frame as well. Okay, first of all, okay, we had the 132.70 area. Now I took a couple of really small positions here as we hit the 132.70 area. As you can see, we got some nice price action from here and here. And so you're probably wondering, how do I know how to assess this price action? How do I know like that it is a good time to sell? Well, what I always do is I don't ever just jump in the market. Okay? As a price action trader, you should never just jump in the market. You're looking for evidence, right? And so when we got to 132.70, as you can see here on the chart, just put my arrow here, we rallied all the way up here really strongly, and then the market fell down. So that was my first bit of evidence. Then the market tried to rally up again to it, and then it fell down again. So after that, I actually knew, okay, this is a resistance zone. This 132.70 is holding, so I will just sell into this pair whenever I get a good bit of price action at that zone. And if you look here where I had the arrows, Okay, so I got a few trades here, which I took profits off pretty quickly. I basically just took it down to the bottom of where it was roughly bouncing around this area on all these different pairs. So I was only getting about, most of them I was only getting about 20 pips, or some of them even 15 pips. This one example, it was just 13 pips, but I actually got break even down in this last trade. This one I got like about 15 pips, I'm pretty sure. 15 to 20. Oh, that's a 20. So I got like two 20 pip trades and just one just above break even. And then it broke out. Okay, so I'm looking for the market to tell me what to do, right? That's the first thing you should do when you're trading price action. You're also looking for quality engulfing candles, like I mentioned before. And so later on the Euro US, it actually broke out higher above the 132. As you can see, we got no bearish price action here, so I was taken out at break even just here on this last trade, right? And then price moved up, price kept moving up, and we didn't get bearish engulfing until we got all the way up here. Okay, so but I didn't sell here. I'm looking for evidence. Remember, we're looking for evidence again. Okay, so you've got to get to this process. You know, to create the price action mindset, you've got to get into this process of looking for evidence. What did the market just do before? Okay, so we got here, it sold off a little bit, price came back up again, it sold off again, and so by the time we got back up here again, I was like, okay, let me sell this, get some good price action. As you can see, we got this nice pin bar, and then we got a nice bearish engulfing candle, and I took the price down to about here. So nice little tiny trade up to about here on this pair. I just took it to this low. So it's like a bit of basically a one-to-one on this trade. Okay, but then whenever price basically came back up to here, I would sell again. And this time when I sold, see how price rocketed back up here? I sold again, and I managed to get about 35 pips from what I remember. Must have taken it all the way down to the bottom of the range. As you can see, we've now got it identified as a bottom, so you know you can target that sort of area on this trade, which would have been about 35 pips. This is one near the end of the week. Yeah, I got about 35 pips out of that. All right, and then this one again, which happened just the other day, which is a nice sell-off. This was on Friday, just yesterday actually, and I sold after this bearish engulfing. Oh, it's not an engulfing candle; it's a big bearish candle though, and I just took it down to here for about 25 pips. Okay. So that was some good little, you know, a bit more than a one-to-one risk sort of trades. And, you know, like I said, I'm looking to the left. I'm looking for evidence of what price did just recently. And I'm also looking for low risk as well. Okay, so let's move on to the other pair. Okay, as you remember, like in the video, the forecast, I went over GBP New Zealand. And I said to you guys that I still had one sell position on this pair. Well, I did take profit. Took profit just down in this zone. Actually took it at the bottom of one of these pins here when price just kept bouncing down this low. I saw these pins just kept bouncing around here, so I took it out around here somewhere. Alright. I'd also locked in my stop just above these highs here when it was bouncing up and down here. Okay, so I got out of that sell position. Then I said to you guys that when price gets down to this structure, we're probably going to get a pop, because this is probably where a lot of the buyers will get into the market. So once again, I jumped down the 15-minute chart, and I'm looking for evidence, right? And like I said, mean by evidence is you don't take the first trade, okay? So I didn't take a trade here. This is just looking for evidence. I do mark it down as a bounce when it happens, but as the price moved along, as you can see, came back to that same price, and so I took a trade here. And you're probably wondering, where did I take the profit to? Well, let me just show you first off what's my risk and what's my reward on this. I look to the left, right? So I'm entering about here. My risk is about just over 40 pips. I mean, you've got to add a little bit because of the spread with GBP New Zealand. I get the spread for about 5 pips on Go Markets. Okay, so add a position. I took a buy trade here. As you can see, that's an engulfing as well. If I can zoom in a bit so you guys can see it a bit better. So yeah, I've got the evidence. I've looked to the left. Okay, and I took this trade here. All right. Got this nice engulfing. I said, oh well, okay, I'm going back to the previous highs, which is the bodies here. and it got out about here for about 35 pips. So, like I said, I risked about 35 to 40 pips, and I made 35 pips. So it's a nice 1-to-1, right, on this trade. Okay, and then, all right, and it's not a coincidence that price, I mean, you guys should know this as traders, that price will fall, will respect these previous highs and sort of sell off, because other traders are doing the same. That, you know, they're taking their profits out. So, like I said, you always go for a little bit less than the previous high just to make sure you get your profits out. So what I did is, okay, after I got out of that profit, got out of that trade, what I do is, even though it kept going higher, I didn't take any trades there. I did take a trade here. What I do is I set my alarms and I wait for price to come back. Now I do set my alarms a little bit before price gets to there, just to see what price will actually do. And I took this candle. You see this? Because I was waiting for it to come down to this red line, this sort of area, this red support area where it had supported here and supported here in the past. But it didn't just get there. And that, you know, if I see a good price action signals right near there, I'll still take it. I saw this bullish engulfing right here. Right, so I'll just zoom in to show you guys. And I entered here. My stop was, I closed below this low. It was about 40, it's like about 48 pips from what I remember. 48 pips, basically a 50 pip risk. And like I said, guys, I don't always, like if I'm just trading the market, I'm actually got time to watch the market. I don't actually usually set a stop loss. I'll actually just watch the market, and if I get a candle close below that level, if I've got time to watch it, I will just get out. So that's, I have like a manual mental stop loss. But if you want to put a stop loss, you know, if you find you find a lot of difficulty setting stop losses and getting out of trades if you don't use a stop loss and you're just using a mental stop loss, then I recommend just putting a set stop loss in there. Now, anyway, with this one here, with the GBP New Zealand, I actually aimed for the previous high, a little bit less. So I got a 60, just over 60, from what I remember, just over 60 pips on this trade. Around there. And yeah, that one went really well. And what was I going to say about it? Oh yeah, 60 pip, around just over 60 pip gain, and I risked about 48 pips to 50 pips on it. So it's a bit over 1-to-1 on that trade. And so yeah, that's with the GBP New Zealand. I've got a couple of trades out of that, which was quite nice, both pretty much 1-to-1 on both those trades. And I just wanted to show you the mindset. Like I was getting, you know, this idea of this bounce, this support area from the higher time frames, like the 4-hour chart. You can see, you can see it on. You see these movements. It's bounced here before in the past, and we've also had this as a resistance. So it was very highly likely that it would bounce there again. And like I said, when I'm on the 15-minute, I'm looking for that initial bounce before I take this as a support area. I don't want to just see it just break straight through, you know, and I'm looking for a bullish engulfing as well. So that's what creates the price action mindset. You're just looking to the left, waiting for evidence, and then executing your trades. Looking at your risk reward, your potential, you know, add it all up. Okay, so the next pair I'm going to go over is the GBP New Zealand, not GBP New Zealand, GBP US. And that pair last week was super strong. Like it was super trending, really strong uptrend, and it just seems like almost nothing's going to stop it. I did manage to get a couple of trades out of it, and they were just around here, these trades. I got a trade here on this pin bar, as you can see here. I looked to the left. This was this is a major resistance area, about 158.30. I mentioned that in my my Forex Outlook last week, and I said to you guys as an area to watch out for around 158.30. And as you can see, exactly what happened. We got the evidence. Price went down. I didn't get in there. I didn't get in here. Waiting for it to come back. Set my alarms near the resistance line. We fully got a retest of the resistance. Then we got the price action signal. That gave me my entry, gave me my risk just above this pin bar. So as you can see, very tight risk, only a risk of about 17 pips. And I didn't really go for too much pips out of that. I think I just went for about 20, 21 pips out of the market on that trade. Just a nice, just over 1-to-1, risk reward. I could have gotten probably a bit further, like aim for this low, but as it touched the bottom of this Bollinger Band over here, I just decided to get out. Just took a small position because this pair had just been so bullish, and taking a counter trend trade, sometimes you're just better off just taking small amounts when the pair is so bullish. And I had set the alarm after I'd gotten out of that around here to watch the market, and as you can see, when it got to here, we had no bearish price action, so there was no execution. Now, so that's one of the beauties of price action. We're always waiting to see what happens when it gets to these zones. And see, price action kept you out of a bad trade here, whereas some other traders might actually still take it just based on the belief that, okay, it fell here before, so it's going to fall here again. That's not necessarily the case. There's no reward for jumping in on the market and just hoping for the best. It's always better to just wait, see a little bit of price action. You know, it's better to take a little bit less pips from the market and have good price action on your side than it is to just jump the gun and get into the trade. And as you can see, multiple confluences again, guys. Resistance, major resistance, price action, and we got the top of the Bollinger Band on this trade. So I just had one trader there. I thought I did a couple of trades there, but it looks like I just got one trade there last week. Okay, so, oh yeah, AUD Jappy. And bear in mind, guys, when I open trades, when I get these signals, as I've mentioned in previous videos, most of the time, unless I'm not 100% confident with the trade, most of the time I will open up two positions. One I'll take to the next problem area, and the other one I'll set just above break even. So just bear that in mind. Most of the time I open up two positions. Okay. So anyway, this is not the AD Jappy, this is AD US. I just wanted to show you, we got up to here, then we got some bearish price action at the 93. Like I said in the weekly forecast, watch 93, we could get a major reversal around that zone. And so I just wanted to show you the trades I took. I took a trade here just for a small amount of pips, but as you can see, the risk to reward was great because, I mean, I had nothing above. All I had to do is risk about 12, 13 pips on that trade, and I took it down about 15, 16 pips on that pair. And I usually get just over 1 pip spread on that pair, so that's a good risk reward. This is the other trade I took on this pair. Got in a little bit late, I thought at the time, but the price did still keep moving down. I was risking about the same. I just risked to about here, so I was risking about 19 to 20 pips, and I got about 20 pips out of the market. So on this pair, or a little bit less. It wasn't perfect risk reward on this one from what I remember. Then, okay, this wasn't perfect price action, so I didn't take it. I decided just to keep out of it, that one. It just didn't look strong enough. Got no bearish engulfing. This one here I did take, as you can see. I placed my stop just above the candle. Price went down, came back up, and took me out at a small loss of about 12, 13 pips. Okay, later on, as the pair was moving back up over here, so that was a losing trade there, guys. Okay, and so I was expecting it to come back down to here. Okay, so later on I was like, okay, so I'm still looking to see if this area is still, you know, because this could be just a false break high or whatever. And then we got this big, massive bearish candle here. Now, I didn't enter after this bearish candle straight away because I wanted to see that it broke back below the 93.11 area, which was my drawn major structure. And so as this candle started to go down, I just entered a sell right here, right? Just placed my stop just into this candle a little bit, just up here. So my stop was really, really tight. So just in case it decided to flick back at this structure, as it could have been a structure play, and I'd want to be out pretty much straight away. So I just placed a stop just up above here somewhere. It's a small, like 10, 15 pip stop, if that. And I took this pair down to here. As you can see, it sold off really, really quick. This was just after some Australian news. And I took it down to, I think, about here. For about, it was just over 50 pips I got from that trade. A pretty good risk reward. I was only risking about 15 pips in the market. I got 50 pips, just over 50 pips gain. Okay, so then I was watching this area. I was watching how it was bouncing here because I saw on the higher time frames that this was a previous resistance structure. So I knew we'd get some bounces here. So when I first saw this bounce here, I didn't take this trade. Remember, I'm looking for evidence. But the evidence was saying that it's going to bounce here. So I waited, and then I set my alarms down here, and then later on price came back here nice and beautifully, gave a nice bullish engulfing. I put my stop just below the candle, gave it about maybe 5 or 6 pips room, and then just let it go up to the previous high area. And I got out about here on this candle up here somewhere. It was, I don't, like I said, I don't go all the way to the top of the previous high. You see the previous high was about here, 33 pips. So up around here. So you can see I got about maybe 25 pips from this market just on a little buy trade. My risk was about, like I said, 15 pips. And I got about 25 pips. So somewhere around here I got out one of these candles. Okay, so what other pairs we got? New Zealand, US. Okay, New Zealand, US was an interesting one. As I mentioned in the weekly forecast last week, I was saying that around between 81 and 81.50 area, just around the 81 zone, we're going to probably get some nice bearish price action. As you can see, it just raced straight past the 81 zone, but it did find resistance just near there, around 81.50, and this is the first sign that gave me the evidence. And I could almost see a bottom here as well. It was sort of even giving evidence of, you know, roughly the bottom, which is around here on this pair. And you can see that it sold off not quite nicely. I did not take this trade. Like I said, we're building evidence, this one here, but I knew now that if I took a trade up here, I could go for around 20 pips quite easily, and my risk was about 14, 15 pips. So it's a better risk than reward. Okay, I did take this trade. Like I said, it's not perfect price action. Like I mentioned in the previous video, you know, price action doesn't have to be perfect all the time. But it had multiple confluences. We had this double tap area. It was perfectly in sync with it. It also was at another major resistance, because this is a resistance zone. I could just risk 15 pips on it, right? And then I just take it down to the previous low, which was about here, which is about 17 pips. So it's basically a one-to-one risk reward on this pair. And so, yeah, that was a really nice trade. And so basically, as soon as I got out of that trade, and sometimes I'll just let it run and I'll just wait for an opposing candle that's bigger than the previous candle. You can see it did bounce up there, so I would have gotten out there anyway. Okay, so moving along, look to the right here on the New Zealand US. Okay, so came up here, as you can see, looking for some bearish price action. We got some nice bearish pricing just here on this candle, right? And I just took it down to the previous low, or just basically to the bottom of this Bollinger Band sort of area. As you can see, the risk reward, I took it above this pin. So it's about 18 pips risk reward, 18 to 19 pips risk reward, and you took it down to about 19 pips. So it's basically a one-to-one again on that one, guys. Lots of one-to-one trades last week. Had very minimal losses, which was just great though. Okay, so let's go to the next pair. Like I said, you look to the left, you're looking for evidence. What did the price do when it got to this major structure area? Okay, so this is an interesting one on the US Swiss. I don't usually trade the US Swiss. I'm just going to show you what I noticed on this pair and the reason I decided to trade it. Okay, now I don't normally, like I said, I don't normally trade this, but this was exactly a... Oh, I got it around the wrong way. It's exactly an in-between 50, if you drew that to there, it'd probably be exact. Yeah, it is. Okay, so it's exactly in the 61.8 price zone for a retracement in an uptrend, and this is where often a lot of buyers, especially banks and big buyers, get in. They'll actually, you know, continue moving the market, or you usually get a pop around the 61.8. I've mentioned this in previous videos. If you want to go and check out my previous video called on Fibonacci retracements, you can. I go over all that in a lot more detail. And so anyway, I'll show you this on the 15-minute chart. I managed to get a trade out of this one last week. Yeah, just here, like I said, looking for evidence of that area. It did bounce there. Got a really nice bounce. So I knew it was a good, you know, risk reward. And as you can see, it's about 40 to 45 pips average. And we got a bounce right here. Came back, hit my alarm, bing, 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 bing. Came and checked the computer. Was watching, is it going to come down here and do a big engulfing? But instead, what it did is it produced a nice pin bar, moved along, got an engulfing. So I got in just after this candle here. Right, put the stop below the low, so I was risking about just over 30 pips risk on that, and I took it up to nearly the same highs, so around 37, 38 pips. Another nice 1-to-1, and this was a really quick trade. As you can see, it was just like 1, 2, just over 3 counts. That was a news-based one as well. That was like the same time I was taking a sell euro as well, so this was like a bit of a quick trade on both those pairs. Okay, so that was another trade I took there. Like I said, we previously got a bounce here to the left, bullish bounce. So basically, I knew that if price came back here, if we got some nice price action, and and the other confluences lined up, I knew that this would be a good risk-reward trade. Okay, so Euro AED, I didn't take any trades on this one, guys. I've got it here because it was one of the ones that I had on my forecast. I just wasn't happy with where it got to. It just didn't seem to. But as you can, now that I'm looking at it on the 15-minute, I can actually see that you could have actually traded this one. This was the evidence. Then price came back up here a bit later and actually fell down again. However, you'd be in the trade still now if you were, which is over the weekend. So whether or not you guys like holding trades over the weekend, that's up to you. But basically, like I said, looking at the 4-hour, we're just waiting for a pullback to here, and then I'll just see what the price action is here. I've got my alarm set there. Okay, so let's move on to the other pair. AED Jappy. Right, okay, AED Jappy. Interesting pair. Okay, so like I said to you guys last week in the weekly forecast, I said to you guys that around 92.40, 92.50 area, we're going to get a lot of traders taking profit, so I expect a nice retracement. Expect the retracement, so if you were buying this pair, you would have gotten out around there, and that was a good take profit area around 92.50, and it came in a bit later than I expected, but it did come in, and I just wanted to show you that in 15 minutes. I did take a couple of trades. First of all, I saw the evidence in that zone. We fell down here, so I could see a top, right? So then when price came back up again, I did manage to take a trade just here as the price was just moving down, just producing, you might not be able to see with your own eyes, but I'll just draw it in, just moving down, a nice channel sort of formation on this pair, and yeah, just took one of these, just took this engulfing here. So I entered here, my risk was just up here, so just over 30 pips or just under 30 pips, just around 30 pips on that pair. Like I said, I use a mental stop loss, and if I've got the time, I'll watch the trade. So I'm just showing you the stop loss here in pips because it didn't end up going bad. So I'm just showing you how much I was willing to risk on it. It was around 30 pips. However, if I can't watch the trade, I'll actually just set a stop, which makes it a lot easier. Okay, so anyway, just took this pair down to here somewhere, like about 28 pips or 25 pips even, I can't remember. And as you can see, the price just kept meandering lower and lower and lower. Okay, so I drew in this box because I was waiting for it after this trade to see what price is going to do. Is it going to push up high to the top of the box and then come back down again? Because we can see it been meandering down, or is it going to break out of the box? So I was waiting for that evidence. Now look to the left, you see that box area, we see that bouncing area up there on the tops. Now we got this massive, this beautiful engulfing candle right here that broke right below the box area where price had been contained for all that period of time. And so as soon as it broke out of there, I had my alarm set here. I saw it break out of the box, watched it close, entered a sell position, put my sell stop loss just above the pin, because I knew that if it got up above the pin, I was definitely, I'd definitely be wrong. So I expected a big move out of this because it was moving so fast, and I took it down to just around here on this pair, somewhere in here. It was about 60 to 70 pips, somewhere in here. So I saw this was sort of bouncing away here. Okay. Any other trades? Did I take any other trades on that one? So that was a good, nearly a 1.5 risk. Yeah, a bit over 1.5 risk. So it's nearly a 2-to-1 on that trade. Okay, so what other pairs did I go over last week? Oh yeah, GBP Jappy. And like I remember what I said, I take 2 positions. Okay, when I'm entering trades. Like, I do that pretty much most of the time. So I'm actually showing you guys pretty much all the trades I've taken last week. Okay. So basically, this is the GBP Jappy, right? And I'll just show you on the daily. Okay, so I lined up this daily line here. It's just beautiful, like symmetrical daily line, and I saw that it was getting weakness there. So what I did, just get back here. Okay, so what I did, no, I'm gonna have to, hold a sec. Had it so it was pulled back, so now I have to pull it back. Okay, so yeah, bear with me, guys. All right. So this is the daily resistance line. So this is the first trade I took on this pair. All right, and I expected a big move. Didn't happen. Didn't happen as much as I'd hoped for. I sold here and took the price all the way. I actually held on for quite a while because I expected this pair to go really, really well. I got out in this pair about here. And I'll just show you my reasoning for getting out of this pair. Well, first off, we had this pin bar and we had quite a few bullish candles down here. But because it had broken up underneath these pins, I knew that it was trying to go higher. All right. Now, so I did manage to get, I got pretty good. I think I got about 70 pips out of it from what I remember. 70 or 80 pips. Oh, it's actually 123 pips. I'll have to go have a look through my history. Oh, I know where I got 70 pips. I'll show you that in a sec. Okay, so I got out about here. So looking to the left, it was breaching up against these pins. Didn't expect that to happen. It did pull back a bit, and I was like, oh, maybe I should have held on. Anyway, like I was saying, I added to this position around here, and this is where I got the 70 pips. I got out of this one a little bit earlier, around here. I got out in the other position around 120 pips. I got out in this one around 74 pips, or 70 pips. I'll have to have a look at my history to check it out. Somewhere around here. See this big bullish candle? It's just like, okay, I'm getting out. Okay, so then I set my alarms because I could see that it looked like it was coming back up to do a retest. It did do this big bounce. Alright, so now we came back up here. It did sell off from here. Right, I got another sell trade right here on this second candle. Came down here. I did hold on. That's 54 pips. Till basically about this candle here. See this candle here, which is an engulfing? And it's bigger than this previous candle. I thought, okay, look, it's bouncing at the previous low. That's the other thing too. So I'm looking at evidence. See here, price came down, bounced here, then price came back again, and then bounced there again. I was basically telling myself, if it bounces there, then get out. And it did. So it bounced here, so I got out. So I got about, on this sell position, I got about 35 pips. Okay. So then I set my alarms. I had my alarm still here. When the price came back up here, I'm looking for good price action. I'm waiting for it to get below here, below this red line. Okay. Then we finally got some. I did enter. I did regret it, but it's okay. That happens in trading. Entered a sell trade. Price went up. Price came back down, thinking, yep, all's good. And then price broke out higher on GBP Jappy, and I decided to get out just around 157.10 area on this pair. Once it had gotten up here, I was like, oh, it's more than just an average little flick up. So I decided to get out, look to see if price would come back in, get another position. So on this last trade here, I lost about 84 pips on that last trade, on that pair. Alright, so a couple of good trades on this one, and then one bad one on the end there. Okay, so that's basically, I just wanted to show you like the trader mindset. That's how I look at the Forex market. I look for evidence. Just to wrap it up, I'll go back to the Euro US, which shows some really good evidence. Look for evidence. Price came up, fell down, comes back to retest, seeing some nice price action, sell down to the low, or just down to the previous low of where it was coming from if you just want to take a small position. Remember, you always want to go for at least 1-to-1, guys, or or more than 1 to 1. That's always best, because you know, when you do get losers, those extra those extra profits do add up and do help to cover any losses that you do incur in the Forex market. As I said, look at this. We've got this nice bounce here. And a trader really could have been trading both ways on this pair last week. As you can see, it was quite range. I do prefer the bearish preference though, because you know, we've had this massive downward move. This looks like a correction to me, and then price is trying to push lower. I'm going to find out next week if that's the case. Euro has had a lot of recent strength lately, and so it's a bit hard to tell whether or not it is actually officially, this is actual real downtrend. I mean, the candles look great on the daily, the candles look great on the weekly, but there's just so much momentum to the upside. So only next week will tell if we get another sell-off here. If we come and break down below 132, back below 131, then we'll definitely know that this is basically this is a real downtrend. But at the moment, as you can see, we had these nice plays. Look to the left, we had some nice evidence, multiple trades. So we had this nice trade just here on Friday, which was just a nice risk reward, just a bit more than 1 to 1. It's all, and nice and quick as well. Willing to hold on if the price went further, just letting the market decide how much I'm going to get from the market. And like I said, I took all 15-minute trades on this last week. As you can see, look to the left, then sell, sell, sell. Okay, so I'm just going to round up this video now. If you guys have any questions, just feel free to add them below on the video. If you want to see more of on this subject, more in this series on creating a price action mindset, then all you got to do is just keep liking, just keep hitting that like button, and I'll produce as many videos as possible in the future on this subject. Like I said, I could produce like a part 1. I mean, like this would be part 1. Produce part 2, part 3, part 4 as time goes on. If you guys want to, see more in this area, if you guys want to see a different sort of video to do with Forex, then feel free to shoot me a line. This video I just thought would cover a lot of the basics, just show you what I'm seeing, what I'm looking at, what I'm thinking on these pairs, and especially considering it was all the previous areas I was telling you guys to watch in my weekly Forex outlook last week, which just shows that the trader mindset and then actually the application of actually trading it when it actually gets to these zones. Anyway, I hope you've enjoyed this video. If you haven't done so already, jump over my site, www.forexreviews.info. Add your name and email to get more video updates about strategies, tips, tricks, in the Forex market. It does not cost anything. Just add your name and email, and yeah, have a great rest of the day, guys, and happy trading next week, and I'll speak again soon. Okay, bye for now.